Welcome to ForexTV.com. Today is Wednesday, June 10th. I'm Tim Kelly with the New York Forex Market Buzz. Dollar is rallying today as equities decline, crude oil is pressing higher at midday, and gold futures are marginally lower. Today our guest is Vassili Serebriakov, Senior Currency Strategist at Wells Fargo. Thanks for joining us today, Vassili. Welcome to the program.
Thank you.
Vassili, we saw we're seeing today a bit of reversal in dollar fortunes. Yesterday we sold dollar after a lot of dollar strength in the past week, and now we're back to dollar strength. What do you make of it today? Just a bit of profit taking amid maybe an undecided market?
Yes, that's probably a good description. I think the currency market is somewhat marching to its own beat over the past three sessions. And if anything, both dollar bulls and dollar bears have been disappointed, most likely by some of the recent price action. It looks like for now the range is 138 to 142, and movements within that range are driven by technicals, positioning, and to some extent equity market movements.
Okay, well, equities are off today. It looked like we were going to open higher in the early morning hours, but futures moved to negative territory. And also today, the 10-year note auction was pretty well subscribed, as was the 3-year, and with a lot of foreign interest. Do you think that is weighing on markets at this point?
Well, we didn't really see a particularly prominent impact from the 10-year auction, or in fact some of the auctions last week. I think the equity markets have already gone very far in a very short period of time. We would be of the view that the improvement in the equity markets and also the commodity markets has already moved way ahead of the actual macroeconomic improvement. So we would not be surprised to see scope for correction in the equity markets in the near term, although clearly today's move is fairly modest.
Vassili, there's a little bit of talk, actually more and more talk today. You and I discussed this previously, perhaps the result of maybe a slower than usual news day, but the idea of interest rates going up here in the States seems to have the equity market spooked a little bit. What's your view of interest rates in the next 6 to 12 months?
Well, it's certainly interesting what's been happening in the fixed income markets, especially in relation to what's been happening to the dollar. It does appear that the yields are moving higher for two reasons. One is perhaps optimism related to the prospects of economic recovery here in the U.S., but also globally. And the second reason is some fears related to, for example, the U.S. budget position and the sustainability of that position, or perhaps fears of inflation. We think as long as the second factor dominates, high yields are unlikely to help the dollar, but at the same time, we really think those fears are probably somewhat overdone in the near term. We don't see an imminent threat of inflation, and we also think that the budget position, while difficult in the U.S., certainly compares to what is the case in the Eurozone and Japan.
Well, Vassili, I'm just looking at something coming over the wire. It seems that the 30-year mortgage rate is back to about that 6 handle, and that puts a bit of a burden on home ownership and home affordability, adding about $1 to each basis point tick up in the mortgage rate is about another $1 for monthly costs on a median home price. So that seems to indicate it's going to put a damper on a rebound in home sales and contribute a little bit more to inflation. If that bears itself out in the next months in home sales, would that impact longer term? Do you think that is going to have an impact on the dollar?
Well, I think certainly higher mortgage rates or higher treasury yields in general would be somewhat problematic from the point of view of economic recovery going forward should these yields continue to rise. I mean, in our view, the recent move is more likely representing normalization in rates rather than an overshoot at this point. But certainly, if they were to move higher, there would be somewhat of a problem for recovery. Not that much for inflation, in our view. But one more point I would make here is that yields in other countries are going up as well. For example, yields in Australia are going up as well, and there's really no prospect for example, quantitative easing by the Australian Central Bank. So again, to a large extent, these yields are related to the global economic recovery. We think, as long as the yields rise, driven by hopes for U.S. economic recovery, for example, it's going to be a positive for the dollar at the margin. But of course, right now, again, as I mentioned before, a lot of this rise is really a higher risk premium on the U.S. assets, and that's not helping the dollar at this point.
Okay. Vassili, tonight we have interest rate decision out of New Zealand. We also have GDP out of Japan. What's your take there? Is there anything of import we should? Obviously, these are two market-moving events. Do you foresee any surprises here?
Well, no, we probably don't see the surprises. The RBNZ rate decision is somewhat of a close call. We do expect unchanged rates. I think, as important as interest rate decisions are, and central bank policy guidance is in general, we do think this is a market more driven by sentiment right now rather than those economic fundamentals or economic data. I think a lot of what's going to happen to the New Zealand dollar, for example, is really going to depend on the trend in commodities and equities at this point. And we do think given how impressive the rallies in risk appetites and commodities and equity markets have been, we do see scope for a correction lower in all of these, and subsequently a correction lower in the New Zealand dollar and some of the other commodity currencies.
Yeah, we're actually seeing Aussie dollar now come off the boil, and as well as dollar Canada. They're retracing pretty significantly here. Last week we're at 84 in Aussie, 108 in Canada. Right now we're 111 in Canada, 111.30 in Canada, and 79.87 in Aussie. In terms of the overall market, as you said, it's sentiment driven. What is a trader to do in this situation? We look at the technicals here as support and decision making, or is this a market to stand on the sideline at this point?
Well, it really depends again on your outlook. I think in the short term, certainly technicals are what's driving the market, so we'd really pay attention to some of those technical levels and moving averages, for example, and so on. I think over the longer term, the way we would look at it is to compare the historical relationship between, for example, equities and the economic performance. And from the current rally in equities, it would appear that the market is pricing in a very vigorous global economic rebound, something in the region of 4 to 5% year-on-year growth next year. At some point, I think one has to make the choice, and in our view, these hopes for a very strong economic rebound are overdone at this point. And certainly we see the financial markets coming down to economic fundamentals rather than economic fundamentals catching up with the financial markets. With all of that said, to us, this suggests that we could in fact see a fairly sharp correction in equity markets and perhaps a correction of 5-10% in the commodity currencies, even from the current, from what you already mentioned, slightly weaker levels than the highs we've seen in recent weeks. So
basically reverting to about a month ago levels.
Yes, I think again, this would be a very much a short-term driven correction. Longer term, we would think that this would have a more constructive view for those currencies. They tend to perform well during the global economic recovery. It's just that we don't think that recovery is around the corner just yet, and the markets overall have probably gotten ahead of themselves at this point.
Okay, Vassili, I think we'll leave it there for today. Thanks so much for joining us.
Thank you.
That was Vassili Serebriakov, Senior Currency Strategist from Wells Fargo, joining us on the phone. I'm Tim Kelly. Join us later this afternoon for PM Exchange with guest Joseph Trevisani here on ForexTV.com.